Welcome to ShortView Trading. This is your morning market hit for Monday, 14th of June. What matters today and this week for traders? Well, markets continued with their slow grind higher in the past week. If you have a look at the S&P 500, it's squeezed up by 18 points, just 0.4% on the week, edging above its early to mid-May intraday highs. And consistent with that, volumes were low. If you look at single stocks traded on the NYSE, volumes have fallen close to multi-month low levels. If we dig below the headline indices, there was a bit of sector rotation last week with strength coming from the more defensive areas of the market and some of the tech growth areas. Both, of course, benefited from the fall in the 10-year bond yield, which was down 9 bips on the week. So the key question, of course, is whether last week's theme will continue this week. The Fed, of course, is pretty key in that respect. The two-day meeting begins tomorrow. And then on Wednesday at 7 p.m. London time, we get a policy announcement, press conference at 7:30. As well as the statement, we get the dot plots, the economic projections. Markets typically squeeze higher into and ahead of Fed meetings, and then they top and often make major local highs on or just after Fed announcements. What Powell says in the press conference will be key. Will there be any hints around tapering, or will the Fed simply reiterate their dovish message and push back the timing of tapering talks? That'll all be watched closely. How markets are positioned, as always, will be key. Have a look at our 3-day put to call ratio. It's recently been on sell, suggesting that downside protection in portfolios is reasonably low. There's plenty of bullishness around, so that's of course troubling for the bulls. So we're watching that indicator closely, as well as a range of other short-term models which guide us as we make trading recommendations, long or short, on the S&P 500. We update the view and the recommendation every day in our daily trading publication, available on the website. And to subscribers, we also offer a free trial for 7 days, and we have a strong process as we go about making calls on market direction in the short term, and it's really driven by the signals we get from a number of our indicators, like this one you see on your screen now. It's our risk appetite scoring system. It's been very good at picking near-term turning points in equity markets over recent months. So we're watching that indicator very closely amongst a range of other models. How are we trading this market? We'll have a look at our daily trading publication for detail on that. And what else are we watching this week? Well, in terms of events and data, aside from the Fed, we get retail sales out of the US tomorrow for the month of May. We also get the New York Empire manufacturing reading, which, as this chart shows, can be a good early read on ISM manufacturing, which we'll get later this month. Elsewhere tomorrow, we get the NAHB Housing Market Index. On Wednesday, it's building permits and housing starts. And on Friday, it's the Philly Fed Business Outlook. So plenty going on. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn, and or Facebook. Thanks for listening.